already. Ooh, it's gonna be a spicy show today. I could already tell. All right, you guys. Okay. Let me. Okay, what am I doing here? Let me put some comments. Not. Should I even? Hold on. That would have been crazy. Okay, guys. All right. Now. Okay, so I'm on. Yeah. I think everything's okay. It's a wonderful day today for sure. One day before earnings. All right. Let's address the elephant in the room. Gamestop is at 30. Very encouraging. Looking good. Above 30, which is, a big resistance for us. Quite some time. Well, look. So this might be the support. Now, I know on earnings, typically what would happen is that, look at this, okay? You run up and then boom, smackdown. You run up and then boom, smackdown, right? Doesn't matter if the earnings is good, right? In terms of the, earnings per share, right? So this get some runs over here and then boom, almost immediately, okay? Not to say it's gonna come down this time. This might be the fake out of a lifetime, right? If you're expecting that it's coming down, it might not. Okay, so if you're, buying call option, hoping that you're gonna get something, or put option, hoping it's gonna get something, just be careful, right? Understand that not everybody is going to do what I'm telling them to do, or anyone. You should make your own decision for sure. Hey, what's up, Hank? I don't know who you are. I've never. But welcome to the chat. Hello. But I will address Morancho in a minute, and I know I'm kind of nervous in talking about this because I don't want to make it seem like I'm fighting with him or anything like that. I respect the guy a lot. Utmost respect for sure. He has his strong opinion for sure, his own stand about things, and I love that about a person. Passionate and whatever. But that doesn't mean he's right all the time. Okay? So to each is his own. I know I'm gonna have some graphs and chart to show what I mean by what is being said. But let's see. Before that happened, let me wait a few more minutes. Getting some courage to speak up a little bit here. Not good at confrontation at all. But again, my utmost respect is to Morant's for sure. His stand is his stand. That's all I'm gonna say. Okay, so price action, earnings. Think about this, okay? When you think something is about to happen, typically what happens? It won't. Just immediately. Because that's the trick of market maker, right? They use volatility against GameStop for sure, especially for earnings, okay? That doesn't mean that the earnings is bad or it's going to be bad or whatever, but just like I was showing you right here, right? Earnings per share is doing well. Earnings per share is doing well to the tune of hundreds and hundreds of percentage up. Okay. Remember, bottom line is better than top line, but they want you to focus on the top line revenue. Now, this top line revenue, I'm hoping that we're going to beat it. But if we don't beat it, you know what's going to happen to the price action? Don't matter that Bitcoin just reached close to, 110,000. Now, some new events could happen where, there's an announcement of, whatever, fake news. You know this, right? News will move market in the short term, for sure. News-based rally, news-based, sell-off. You've heard those stuff all the time. And day trader would use that to say, see, I told you, GameStop is terrible, right? They're going to do that, okay? And what is the next step? Look at this, okay? When it comes down, what happened? A couple weeks later, when people are not paying attention, they slowly buying it up. Okay? Again, market mechanism through call option, through whatever. Because this is the structure of the market. I know fundamental works on the long term, just like how Warren Buffett is saying. The stock market is a weighing machine in the short term, and there's this quote. See, I don't even know the quote myself, but something to the effect of, yes, short term it's going to fluctuate, but long term fundamental will win out. That's all I'm going to say about that. Okay. Now, I know day trader would like to point out, oh, see, GME go down 10% on earnings. Just think about that. Or up 10% in earnings. It's due to, to skyrocket to the moon tomorrow. So just please be aware of the narrative, okay? Now, do I think it's going to skyrocket tomorrow because of earnings? It could. I wouldn't be mad if it happens tomorrow. You know why? Because I'm positioned for it. I've been waiting for it, right? But if it happens from 5 years from now, I'll be happy too. You know why? I'll be positioned for it. I have the shares that I will not sell until, the price target that I wanted. Okay? My price target may not be your price target. Okay? And also, I have a portion that I have to just, again, if I sell at 50, 40, 30, heck, even 35, it's okay because it's just a couple share here and there. I know there's a lot of scary thought that people might sell a few shares here and there. For some people, again, like to me, I have no fear that if the narrative of molasses is true, right, which I think it is, then a couple share here and there is not going to do anything. Because the amount of shares that is being sold, right, again, the narrative, if the narrative is true, that there's so many shares out there that is being sold, not yet purchased, right? What, 10 times the float? What is the OBV? What is the OBV? I don't know. Like 10 billion or something, right? Shares being sold. Then again, like, I'm not scared. And even if like the whole 10 billion is being sold tomorrow, you think I'm scared? No, that's not happening. It will not happen. I'm telling you. People are not going to act in unison in that way. Okay? They might. And here's another thing too. This is why I have my strategy, right? And I tell that. Just in case I'm wrong on that aspect, that's why I'm not touching a certain amount of shares. Because I could be wrong on that, assumption a few shares here and there, and if enough people do it, you know, it wouldn't cause the price to go down or up. Sorry, right? Just in case that assumption is wrong, right? And so, and also too, if that assumption is wrong, right? Let's say tomorrow everybody just decided to sell at $30 because they're just done with it. Guess what? There's a lot of diamond hands out there who would scoop it up at $10 again. And then the cycle will repeat. You know why? Because the company is doing well. Because the balance sheet doesn't lie, right? So what is the fear? Don't be fearful. It's okay. Fear is there to protect you. I get it, Lorenz. You said it. I get it. Fear is there to protect you. But without fear, you cannot get out of your house either, right? Or facing fear. If you're just there in your own home, you just be fearful of going out, you won't get out, And so fear is a function of, teaching you some new things too. So you could use fear to overcome what it is that you're fearful about. So let's say, Matt, I don't think LRC will dilute for now. I know, but hey, anything could happen, right? Like if it's true that he is going to sell the volatility of the stock, yes, dilution is going to happen. And again, every time he dilutes, right, what happened? The money will be stacked into the company anyway. So yeah, short term, your shares, your calls, your shares is going to be diminishing in price. But long term, look what happened, right? So it used to be $10. Now it's $30. So $30 might be the floor, and then if they have more cash in terms of dilutions, it's going to cost the share. But anyway, so okay, purchase more shares today. Good, right? See, that's what I mean. It's like for every seller out there, there's a buyer. So if all of the people that are just so tired of this company doing nothing, they would sell tomorrow, there will be buyers tomorrow. There you go. And so more and more diamond handlers will have their way, of holding the stock at this price. Happily. I'm telling you. So if enough people, sell at 30, there will be enough people who will buy at 30 as well. It's okay. MOAS is inevitable, right? If that's the case, it's okay. There's nothing to fear. Right? If MOAS happens in 5 years, nothing to fear either. It's okay. I could wait until then too. Like I said, I'm positioned and prepared for whatever comes in this company. I've been here for quite a long time, and also too, not just on GameStop either. I think I have quite a bit of experience. Not to say to influence. Please don't do what I do. Okay, I'm not saying that I'm an expert on anything, call option or whatever. Nothing. Okay, just simply my experience. Now, I know influence. Yes, there's might be one person out there that could listen to me right now. Because remember, I only have a few people listening. So please, that one person who thinks that you're gonna do what I do and succeed, no. You know why? You won't succeed the same way as me. I'm not saying I'm successful either, so I'm not. Okay, but I'm saying, because the time in the market, right? The time in which you spend in the market and the lesson that you've learned from the market is very different from me, right? You might have more experience in the market, investing in something, better than me. and make more money than me could ever imagine, right? It's okay. Doesn't mean that you're better or worse or anything. It's just a function of when did you realize that you need the market in order to, make wealth, store wealth, right? Generating wealth over time, right? Or short time, right? There's so many participants out there, you guys, that you'll be fine. Okay. And again, opportunity is everywhere. I'm not saying because I'm covering GameStop, you have to buy GameStop. Please. Like, do your own research, have your own conviction. That's the only way. And also, too, just because you listen to me doesn't mean that you do the same thing as me. Please don't. Have your own thoughts, okay? Have your own, way of this. Have your own way of digesting information, and then apply it to your own experience, right? And if you don't know anything, please, learn about it first before saying certain thing is a scam, certain thing doesn't work. It just so happened that when I learn best when I practice it, right? Go out there and just do it. Break things first and then build it later. That's just how my personality is, right? And of course, if you're scared of breaking things, then read a book. You could also learn like that way too. So at least if you read a book, you don't, quote unquote gambling. And since I'm not a reader, I hate reading. Not that I hate reading. I mean, I pass certain class, right? But it's a not a hatred, but like it's not my favorite things to do is to read and learn. I learn better when I watch people doing things and doing things and learn it through my own mistake, right? And so why do you think I learned so much about the stock market? Because I make all the mistake in the world, and I probably will still make more mistakes in the future. So that's how I learn about option. That's how I learn about everything else that has to do with the market. I didn't know the depth of the market until GME, for sure. I didn't know that there's a T+2, T+3, right? Short interest. All of that comes into play, and the market is so complex that it's not just one thing. It's going to cause something to happen. No, it has to happen in unison. The perfect storm that happened back then, it was a perfect storm. That's why it happened the way that it happened. Right? You have Elon Musk tweeting about GME. You have Jamath Palahapitiya tweet about GME. You have Ryan Cohen coming in. Yes, Ryan Cohen was the catalyst at the time. But that run that you saw happened when the most famous person in the whole world tweet about GameStop. Not just GameStop in general, but like the Super Stong or something like that. He tweet. And so again, Super Stong at the time, it was GME was the most popular one. Of course, people are gonna rush in and buy, right? And when they buy it at that time, obviously we all watch it happen, right? And it was like the historical precedent to perhaps that was the media trying to get people to buy in at the time, to buy, and even though it was overvaluated, it's like the valuation that it was at the time was not close to where it is today. People were buying it, right? And so again, you could say that was a psyop as well, to get people to buy at a high and then get scared to sell at the low. So people lost money back then, right? And so I got back in, back in, I didn't get back. I didn't buy it at the time. I bought after. And the reason why I bought it was the fundamental, right? And also too, I thought it was going to continue that Let me look at the price real quick. Right here. So when I bought it, it was around here. I remember $60. Right? Okay. Right here. I bought it around here thinking it was going to continue, right? But again, in my mind at the time, I was like, you know what? I have so long to go because it was like Roth IRA, stash it, forget it, buy some more over here, buy some more over here, buy some more over here, buy some more over here. Eventually, I stopped buying around here. Okay. And my average back then on that particular portfolio was around 42, right? Because again, I bought as much as I can back then and then held. And then, as time goes on, it went down to 10. Like, I mean, just because I hold it doesn't mean the price gonna stay, right? No, of course not, because the market condition, people just didn't believe it in anymore. People thought that Roy and Kitty is not here, right? People were just like, oh, look, people are becoming, decimated or whatever, right? But I didn't sell. But again, just because I didn't sell doesn't mean that the price is going to stay up here. I was down quite a bit. Yes, every single person that I show my portfolio to told me I was crazy, told me that I was gambling. So had I listened to these people telling me not to gamble, guess what? I would have lost. Had I had no ability to think for myself, I would have given to that, to that, what is it? I wouldn't say scolding, but what to that type of comment, on it's like, well, you just don't know what it is. Exactly, right? So again, just because people are belittling you that you're gambling doesn't mean that you're doing something wrong here. And again, like, I'm not advocating people to buy into call option and that's the only thing that you should be holding. No, don't YOLO. Okay? Don't be like, if I lose this life saving, I'll be okay. No, only the amount in which you feel comfortable that your life is not going to change. Okay, that your grandma's saving is still intact. Okay, don't be YOLO and call option and expecting to, to earn what, hundreds of millions of dollars in 2 days. No, that's I wouldn't say impossible, but it's unlikely to happen. And you're putting yourself at an enormous risk to do that. I never advocate people to do that, right? Now, when I said gamble, for me, I have a portion in which, yes, I have that allocated towards that. Why is it so small? It's really small, I'm telling you. It's really small compared to my whole portfolio, that I'm okay. So that's how I learn. And again, I'm fortunate enough, I've made the right choices in my life to bring me here. Okay. And I get it that people might, have no, like, they get influenced so much by what people say. And that's why I'm so cautious to tell people, right, not to do that. I'm so careful because I have people in my life at this moment in time, I'm telling you, that I got in at this point right here. Okay? They bought it 21, sorry. They bought it right here. And I told them, okay, yes, buy and hold. Don't worry. It's going to go higher. And this is around the time when Roy and Kitty was live streaming around here, right? Back in June. And guess what? They held and then it went down. What did I tell them? It's okay. Buy more. But guess what? They keep holding until here, right? They wanted to sell. I said, well, there's more room to grow. And guess what? It didn't. Disappointment, right? So yes, I was bullish AF. And again, I'm telling you, I was bullish. Every single penny that I have extra was buying GameStop. I don't go out to eat. I don't go any on vacation. Just recently I did. But I saved so much that I was like, oh, shoot, what if I don't get a chance to enjoy the fruit of my labor, right? And so that's why I decided to go on vacation recently. It's okay, right? And again, sometimes you just have to like take a break and then kind of reassess, okay? And so that's been my whole entire investment, not thesis, like an investment journey, that I've learned. I've learned to know my own personality. I know that I'm convicted, that nobody could change my mind. Like, I don't care if Morantz came come to me right now and say, Jimmy's going to the moon tomorrow. I'm not going to be like, okay, all right, if it happened, it's happened. Good. I'll be fine. I'll be set for life too, right? And just because Moran said, no, I'm going to sell at, $400? That's what he said today. That I'm going to sell at $400? No, I have my own price target, right? I think it's going to go to 1,000 or more. I think. But that doesn't mean I'm not going to sell on my way up either. You see what I mean? So I have my strategy going on, and again, even at 1,000, right? I still have the shares that I will never sell even at 1,000. I will hold a certain amount of shares, right? Right now, I'm just thinking what it is yet, right? And so in my Roth, that's going to be there. I'm thinking somewhere around 500 or 200 shares that I will never sell, even if it goes to $1,000. I'm serious, right? So there's a certain amount. I have not decided how many yet. So I'm thinking maybe 200 or 300 shares. But I might go crazy and just not sell, that portion. But my point here in telling you this is because I listen to his show all the time, and I will still continue to listen because, again, it's very knowledgeable. I know, like, he's very knowledgeable on his craft. He's good at giving you the information that is needed for GameStop, and very good one at that. Top-notch researcher for sure. He research a lot on private equity and all that stuff. Immensely helpful in my decision making in investing in GameStop for sure, right? And again, fundamentally, that's what makes me so bullish about the company long term. Hands down, for sure. But again, doesn't mean that he's right all the time, though. I disagree on Bitcoin, right? He used to not like Bitcoin, but now Jimmy has Bitcoin. So, and Ryan Cohen has, has articulate why he bought into Bitcoin. And I love how Ryan Cohen articulated too. And I agree, with that line of thinkings. Whether he comes to that conclusion because people are forcing him to do that, not by force, obviously, but meaning like people keep mentioning it. You got to buy Bitcoin. You got to buy Bitcoin. Maybe, he got enough got enough mention on the tweets or whatever that he has to venture to that. And again, that's just evolution of business, right? Business will evolve to adapt to the new technology or whatever. This is a technology, okay? For sure. And so again, so now Jimmy has Bitcoin, and yeah, all of a sudden Bitcoin become more and more popular. And again, popular in a sense that more and more people now understand that inflation will for sure eat up your buying power. And that's another point that I wanted to make here, because I heard him say inflation only 2%. I'm like, Moran, don't say that. Because it's not 2%. I know they tell you it's 2%. But, okay, so let me, hold on. I need to take a sip of water before I talk about this. So I got a video here. Now this one is, let me see, how long is this? Why is there breastfeeding over here?
What's going on, guys? In this video, I'm going to
This
walk you
was
through
not
this
this year. I think it was like a couple years ago, but the principle is still the same. I will show you this website afterwards, okay?
Awesome website. It's called inflationchart.com, created by this guy right here. If you are watching my channel, Level Sio, or however you say your handle, I love your website. I think your website's absolutely amazing. You guys want to follow him on Twitter, go. Got some good content, and he has a totally awesome website. I'm going to be walking you through this. It's going to be talking about inflation and how the stock market is not what you think it is. When you compare it to certain indexes or monetary supply, we are in a lot worse condition than we actually think we are, or what the government's leading us to think. And this isn't supposed to sound like a conspiracy theory kind of video, but we all know inflation is a bad thing. And this chart that we see, here's the S&P 500 index. It is a complete lie. We have not even recovered from the dot-com bubble when you adjust it for inflation. And what type of inflation am I talking about? I am not talking about what the government tells us, right? This chart where, oh, now we see 5% inflation and we go 25 years out, and here's what inflation looks like each year. I think the picture is a lot more gloomy than what this is telling us and what the feds are telling us, or the CPI index. This tells us the real picture right here. This is the M3 money supply for the United States. And you can see right here, this is all the way back to let's go back to 1971, because that's when we got off the gold standard. You can see we have been slowly increasing the monetary supply. And right here, right before the coronavirus, we went from 15 trillion up to over $20 trillion in circulation. That is a 33% increase in less than 2 years. That's absolutely crazy, dangerous if you ask me. And that's why we may see inflation in a lot of different fields. I mean, real estate has been going through the roof, the used car market, and it's pointing to another recession. And that's at least what everyone's saying. But I think this chart tells a different story, and we could go a lot higher. And when I say this chart,
don't mix pink salt and ice with these three ingredients.
So he's just explaining how it's going to go higher. M3 money supply.
We see a major crash. So I'm going to.
That's the Fed balance sheet, by the way.
Walk through this website, inflationchart.com. I think it is a very cool website to mess around with. But guys, before that, again, make sure to follow this guy, because he was the one that made this website. I want to give him a shout out, give him props for creating that website. And smash the like button and subscribe to my channel if you haven't already. I have over 100 videos of stock market related, Google Sheets related, Bitcoin related content, S&P 500, right? If we look on, we go back to TradingView, this chart is just this chart. We just need to go out to 1971. Well, it doesn't even go back that far. Yes, it does. market crash. And right here, there's the coronavirus. So we saw this huge spike down, and then we've rallied up ever since. So everyone thinks, wow, the market's doing great. You know, money is just flowing in from everywhere. If you invest in the stock market, then you're in a much better condition than you were, say, back in 2000. That's a complete lie when you look at it measured in all money, or we can measure it in just cash, 10-year treasury notes. We could look at CPI. We could measure it compared to all of this stuff. I can't explain it as well as this website. So you could read all of this and hopefully it'll give you a better understanding. But this right here is the absolute price. So this chart shows absolute price, like the price you see in the real world. But this right here, the S&P 500 divided by the M3 money supply. What's that? Well, that is the inflation adjusted price of a stock market or any other market that you want to look at. You can inflation adjust it by the US dollar money supply, M1, M2, MB, CPI, Big Mac, gold, Bitcoin, Ethereum, and many others. So that's what we're doing when we actually click on this little button, and we'll see this, and I'm going to explain it in a second.
Sorry, so I just realized that I was on the slideshow, so the whole show was on the slideshow. It's okay. Nobody listened anyway. There was like only 2 people listening. So like remember, I'm a no-name YouTuber over here, so it's okay. Don't worry about it.
But again, I think it's very cool to look at this website and you can see that we are in much worse off than we thought we were. So let's click on this first. This is the M3 money supply, right? And that is this right here, right? You can see this blue line is the same as this blue line. So when we see this line going up, well, let's take this blue line and make it the base. So that's what we're doing. We're making this blue line the baseline. So then we could compare the green line against the blue line. And what will that look like? It'll look like this, the red line. So
that's eye-opening. You know what that means? It means that if you have money over here back then, your purchasing power was higher than if you have money over here. The same, right? 1,000 over here, 1,000 over here. You have more purchasing power over here based on that. And even then, again, back in the, before the dot-com bubble, people were richer in the stock market. And again, this is the best performing in the world back then. Okay? So if the best performing asset class in the world, S&P 500, okay, diminish in buying power. I know in nominal, like in dollar terms, yes, you get more. Right? So again, just ballpark here, you guys. Okay, $1,000 over here would be the equivalent of $10,000 over here. Okay, and it's in the spans of 25 years. So I know in a span of 25 years, it sounds like a lifetime for people, but that's like almost half of my my whole existence over here, right? So to say that it doesn't matter, and that's only 2%, it's not only 2%, so it matters over time. And this is why generationally, you cannot outwork these type of inflation. Within 25 years, I know people want you to add more jobs to your resume, right? So let's say you've been working for the last 25 years, right? You keep running. Like not everyone would be, so enthusiastic in running that race, Yes, some people make it a sport out of it. Okay, good on you. But again, to run that race just fast enough so that you could stay flat, right? Who would have any motivation to do anything? Remember, this generation is well, this year anyway, this generation, next generation, whatever, millennial actually, is the only generation that will be worse off than their parents. And that's not something to be like, oh, just not be fearful about. And again, if you measure yourself based on this monetary system, right? And that's why inflation, even just, 2%, in which they are telling you, is detrimental to your, money, okay, purchasing power, okay. Now this is the current one. Hold on, you guys. I'm gonna go over your chat real quick here. But here's what you're seeing right now. Even back in the dot-com bubble, the stock market, adjusted for inflation, was actually more valuable. This is what you're seeing right now. It's more valuable then than it is right now. Let me say that again, you guys. Yes, we are $70 trillion right now on the S&P 500. 70 trillion. Okay, but even at 70 trillion, we were at equivalent. Okay, yes, it wasn't 70 trillion back then in nominal terms. Okay, it was less. Okay, is it 70 trillion? Am I looking at it? 21 trillion on M2 money supply. I think this is what I'm seeing. Right? But here's the point, is that if you divided this line by this M2 money supply, like, okay, let me just try to explain this. If you divided this by this by this, and then do that throughout, right, over here, divided this by this, then you get this. Right, so that's why when this spike over here happened, the buying power of the S&P 500, or the valuation of the S&P 500 adjusted for inflation, went down dramatically because the value that you got was less. Okay, so is there any point in time in which you feel richer? No. People back in 2000, before the dot-com bubble, was richer than they are today. Right, comparing to. Yeah, so that's why inflation is so bad, you guys. Okay? Now, here's another point that I'm trying to make too. Like, so this is 1 year, okay? 1 year inflation, not too bad, right? Like when you just zoom in, just like in 1 year time frame, not bad at all. I mean, what's 2%, right? That's what they're saying, okay? So let me calculate from the base to the top over here, okay? So let me try to see if I could find my calculation. No calculator. And to see if it's actually 2% that they are saying, right? Remember, like the actual, they revise all the time, right? Oh, it's the revision of the reversion. And they don't, like even the actual inflation, they don't even take account of certain items sometimes. They take out rent, they take out food, they take out whatever items that they need in order to just give you that number, right? When they tell you it's 2%, it's actually not. So from, let me see, so is this like one? It says 1 year here. Last in, okay. 1 year, okay? So in 1 year, what do you see here? You see 21, Okay, let me see. $21 trillion. Okay, from 21 trillion minus, what is this now? 21.7. Okay, there you go. So let's see if that's 1% or 2%. Now, again, sometimes it's 1 or 2, under 2, right? Which is great, but it's still an inflation. It's not like everything gets cheaper. No, everything goes more expensive. And for some reason, that's like accepted, right? It's like, oh yeah, that's a norm. As if it's like, why? Why is it so expensive? And then divided by this, right? 21. So when you are told that it's 2% a year, this year alone, from July or from June to today. Okay. Wait, is it? Right there and right there. Is that 6 months? No. Okay. July, 1 month, 2 months, 3 months. I think this is 6 months, you guys. Then it's even worse. So why is it like that? It's so weird. But anyway, so let's just assume it's 1 year. But from this graph right here, it seems like it's 6 months. Right? It's more than 2%. That's 3.3% a year. Or 6 months, seems like. Right? So let's just say this is a year. It's still more than they are saying to you. So let's account for 5 years, right? Again, a little bit more time frame, you know. Let's just say maybe 1 year it's a little bit better than others. Now, we know about COVID and all that stuff. So this is going to be terrible. Okay. So again, you could say, well, because of the calamity that happens, COVID, people shutting down business and all that stuff. Okay. Excuses, but okay. They need to print that money, which is, I don't know if they need or not, but look what it costs. So accounting for 5 years, what are you seeing? 21.7, right? That's $3 trillion divided by the original one, which is 18, right? So what type of inflation is this? 20, close to 20%. 19. Okay, I won't say 19. Like I'm not making numbers over here. 18.5% in 5 years. Okay, now if you divided that by 5, you say on average within this time frame, what is it? 3.7%. So yes, it's slightly a little bit more over time, over 5 years. But how many people have a raise over this time, 5 years? Are we all having a raise, or are we all losing jobs? So that's why inflation is so bad. Even at 2%, it's still bad, but the actual number is not 2%. That's the point. Okay? You want to see even more egregious? 10 years. I know 10 years seems like a lifetime for people, right? Man, like people don't realize how detrimental this is. 10 years is not that long at all. 10 years just like that. A blink of an eye. If you don't understand this, you're not going to be ahead. Now, of course, you know, if you're in the stock market, you're a lot better than people who are not in the stock market, obviously. If you have the S&P 500, you are a lot better, you know, better off than the rest of the people who don't. Keep in mind, 50% of people in the US do not have stock on their portfolio. Okay? So 50% of people are falling behind because they don't understand that inflation is doing that because it's only 2%. What's the rush, right? What's the rush? It's only 2%. That's what you want. They want you to think. Okay, so let's do the 10 years. This is 5 years. Okay, so, okay, let me do this. So what is it now? Back here, 12.1 trillion, 12.1 trillion. Maybe I'm doing the wrong math. I don't know. Right? Minus the top, which is 21.7. Okay, what do you see there? 9. Okay, and then you divide that by the original number, which is 12.1. What is that? 80% inflation based on the money supply that's out there slushing around. Right? So 80% over the time span of 10 years divided by 10. What is it per year? 8% of inflation per year. This is what kills America. The world, actually, not just America. And this is the best market that we have. So inflation is serious. It wasn't as serious because people were not understanding it. That's why they're able to, right here, transitory. Remember that terms. It was transitory. It's going to go away. It's going to go away. Never go away. And now they're about to, see, it's perking up again. Trump's about to add more, right? Now, the Fed, have their own balance sheets. I get it. And that's Treasury, right? Scott Bessent just bought, $10 billion worth of Treasury, and people are just still sleeping on that? No rush? Right? So in the last 10 years, on average, there's 8% inflation based on the M3. Okay? I know the stock market valuation doesn't seem to have any, shake up yet, right? You see the valuation here measuring from 10 years on end. If you buy the stock in 10 years ago, so you have close to the same amount. This is what you're seeing. 10 years. 10-year time span, right? So in 20 years, though, you would have had more money if you had, bought at this, more purchasing power. Right, sorry. Sorry. What am I saying here? I'm saying that if you sold your position over here, right, you would have had more money than if you sold your position over here. Wait, over here. So the valuation drop, housing crisis, this is what happened there. And then on top of that, valuation grow higher in terms of global money supply, right? And then this is when it's dropped. So as they print money, you don't feel it because you feel richer, right? As time goes on, you feel richer, but then eventually it fall behind over time. So this is within 20 years time frame. Within 50 years, you could see that the valuation is skewed. It's just recently got catch up to, the valuation, of the current stock market here. Okay. So I know 50 years is a lifetime, and this is why they're able to slowly eroding, people buying power, even though they are participating in the market, okay, at the time, right? People who are participating in the S&P 500 do much better than people are not. Now, that's for people who participate. How about for people who don't have the stock market? They're struggling, right? Again, that's why we're all like baffled You know, why? See, they told you 2%, but in actuality, the stable, inflation rate is 3, right? So 3%, about 0.2 per month. Okay, so if you are spending money month to month, you're okay. You know, you don't feel it as much. It's only a pennies. But if you have a huge chunk of money over time, yes. I mean, $10 billion back then, you could buy what may way more than $10 billion this year. Okay, so here's the thing too. Now, if you measure it against Bitcoin, right, which I'm so thankful that Ryan Cohen understood this, look, everything goes to zero, like it's non-existent. Like the valuation of your S&P 500 is minuscule compared to Bitcoin. So again, that's why Bitcoin is a hedge to the inflation over time. Over 50 years, over here. How about 20 years? What is it? You don't see much. About 10. Okay, and then you begin to see the graph. But this is the devaluation of your dollar based on Bitcoin when you divide it by Bitcoin instead. Okay. That's 20 years. How about 5 years? Okay, 5 years, you begin to see a little bit more, graph over here. But still, yes, there are times when you're better off owning S&P 500, right? When the price dip. But when it goes back up, it tends to go back up way up. Okay, that's what you're seeing right now. Right? And it's about to go even higher. This is within 10 years time frame. Okay, and again, this is why Michael Saylor create the 5 years convertible notes, because of this. Every 4 years it goes up multiples, exceeding the S&P 500 nominally, which is the green, and then also the other one, right? A division based on Bitcoin. Okay, so that's what you're seeing, is that when Bitcoin folks are screaming, it's like, this is a hedge for inflation. That's what they mean over time. Because data doesn't lie, right? But anyway, so that's the graph. I know I'm talking on and on about that, but I think it's pretty eye-opening here. And again, this is called inflationchart.com. It's pretty fun to play around. So they have like other stuff, like Tesla, compared to Tesla, right? At one point, you would have been better off owning the S&P 500. And then Tesla went up over here. So depends on what time frame. In 20 years, you see, because again, companies, have ebbs and flow. Like GME too, it's gonna have ebbs and flows, okay? But compared to the S&P 500, at some time, if you own Tesla from here to here, you'll be better off. But if you own S&P 500 over here, you'll be better off. So, right? So with Bitcoin though, you just can't compare that. It just go up to the right type thing. And again, no CEO, no balance sheets, no nothing to, the only risk is cyber attack. Okay. There's no, again, earnings risk. There's no CEO making terrible decision risk. just straight up money. And like, again, that's why it's like commodity. Like it should be traded as commodity. All right, guys. So anyway, so let me get off of that soapbox. I know, again, this is not meant to be going on and on about like fighting which ideas is the best or anything like that. But, you know, when it comes to inflation, though, I have a hard time believing the official data that is being used out there. And again, you could say that this is just, you know, some website that is not credible and all that stuff. Okay, you could measure that based on your own real life experience. Do you feel like the inflation is only 2% this year? Or everything seems to go up 10% this year? Right? Just compare, you know, the price that you used to pay 5 years ago versus now. What is it? Right? You could blame it on labor, sure. $20 an hour. You could blame it on that. But is it really? Right? Accounting for inflation, that increase is not enough. Remember, 8% a year for the last 10 years. No business would do that. Right? No business would be able to survive if they were to give people 8% a year increase. And why business are allowed, not allowed, but, and why people are not, you know, on the street rioting? Because they don't understand inflation. But anyway, so that's just my soapbox. Let me get off of that. But yeah, it's just a good a good website to look into. So again, if you want to bet, do you? Okay. I'm not gonna say anything. It's like, again, my thought about this company doesn't change, right? Just because somebody tells me to sell now or buy now doesn't change. My one share purchase today is not gonna affect, you know, the whole market. But yes, if everybody buying one share a day, great, in unison, great. People don't act in unison in buying or selling. They're gonna buy and sell at their own time, and I don't mind. So again, that's what makes market. That's what make the price move the way that it does. Yes, I know, without manipulation, right? Without market maker, without all of the kill off switch, you know. Understand that tomorrow, if the earnings is good after hours, the next day, they're gonna halt like crazy. They will halt until they can't. Because that's the only mechanism for them to protect themselves. Okay? Or they would just remove the buy button again. Right? So I'm not trying to tell you to scare you or anything like that, but just prepare for all angle. You know, yes, it could go up, you know, like Morenz was saying this morning. It will go through the sky, through the roof, right? And if it happens, guess what? I'll be set too. I'm positioning for it, right? And so with my 2 call option, okay, selling call, not going to do much. And if I mean, even if people act in unison, right? The price would drop. And guess what? Diamond hands would buy more. Win-win, right? I mean, wouldn't you want the price to drop down to 10 again? So that you have the opportunity to buy more at $10? It's a dream, right? It's a dream. People will tell you would never happen. Okay, I thought it would never happen here. Happens. Okay. If there's a black swan event that will happen, right? I mean, you still have until 2026 or 27 to accumulate. To me, that's an opportunity, right? Because if Bitcoin runs faster, guess what? I'm gonna get more GME shares afterwards. So either way, look, if it takes, another year until the apex of this triangle, yes. I mean, you could do a logarithmic, right, if you like that, and adjust it for that. Okay, then the triangle would be a lot more steep. Okay, so then you have the apex over here. 5 more years, who knows? But I don't know. Again, I don't know how many people would just ignore this company over and over again. But unless major institutions are buying in and hold and keep buying, you won't see anything. Price action. Look at the volume, right? Volume has to come in big time, you guys. Okay? The fact that the price movement over here on low volume, that's concerning. Right? You want the price to go up on high volume for it to hold any value. Okay, see? High volume holds for a while, but still collapse, but then it holds right back up because volume exceeds the average. You haven't seen that here. Okay, same way with here. Volume exceed the average, which is the white line. Volume is important. Remember, market makers cannot control the volume that it was before. So in order to get that volume again, institution has to buy in masses. And you've seen it, yes, in the dark pool. Right? But we need more. We need more than, 52%. Okay. For people to be like, oh my goodness, yeah, GameStop is doing well. So yes, of course, I'm going to add it to my, pension fund. And so that's the only way that the market maker would be like, okay, buy it from us. We'll fill your order, right? And so how many shares do you want? 100 million shares? Okay, let me fill that order. But until people are buying in that sense, retail orders will be rerouted, okay, to the dark pool. And it's been happening for 4 years. We all know that. Come on, Now, yes, Lauren Kitty could come back, spike the option chain again, right? And that's the only way to move the price, against the market maker interest. So there you go. And I think, Rowan Kitty see the opportunity here. And he had massive amount of money in order to do that, And he saw something that people didn't see. So, yeah, only take once. But anyway, don't screw this up either, Just because I'm bullish on earnings doesn't mean it's gonna go up. Okay? They could still smack it down. Remember, bullish price. Look at this. Bullish announcement, right? Bitcoin announcement. Everybody was up to the moon. They could still smack it down. You think they don't have the tool to do that again on earnings? Even if we knock it out the park tomorrow, they could still bring it down. Short term. Short term. Don't be crazy. Anyway, let me get off my soapbox. I think the last year quarter dilution was planned. I don't think they. Yeah, I mean, again, the risk is there for sure. Yes. What site is this? It's called inflationchart.com, something like that. Gamestop won't stop. Yep, Rocket. Look like they're manipulating as we speak. Of course, yeah. I mean, they do that all the time. Look at this. They're halting right now. No, it's not even trading. But yeah, I mean, again, like, yes, they could still manipulate this too. But remember, this is global. Okay, if the volume hits up here, there's no, right, more than average. Volume more than average over the last, okay, well, let me do 1 day over here. So in 1 day, volume hasn't spiked. Okay, so with just a little bit of volume, you could still see that, right? But this has more volume there. So again, the supply shock for Bitcoin is unreal, you guys. Like I'm telling you, that's why Michael Saylor is trying to get as many Bitcoin as possible. And guys, I'm so glad that Ryan Cohen understand this too. And so I think stock to flow, yeah. Okay, so stock to flow was still undervalued according to this. With the 10-day stock to flow, right, there's, different time frame, just like, the moving average, the same exact idea. But even, within the 10 days, stock to flow is still, right there, higher. Why 10 days is just more, I guess, accurate in that. So you could expect to see that, quote unquote, super cycle that people are predicting. So if more and more millionaires are buying into it, right, or thinking about buying into it, it's going to be crazy. Oh, overnight? I didn't even check overnight. Let's see. Okay, so it went crazy. Okay. Nice. Oh, okay. So SPY is going up today. All right. I mean, more money printing, right? Decent move indeed. Yeah, I mean, it could be to prepare for GameStop earnings, right? And then tomorrow they're gonna smack it down, causing some calamity. Put narratives out there that we're in the bear market. Who knows? That could happen too. Black Swan event, some news events that happened. Nuclear war. Who knows? Happens too. Hope not. Oh my gosh, shouldn't be joking about that at all. Anyway, so I was like Googling. So how many millionaires out there in the world? See, more than actual Bitcoin itself. So, and how many do you think has Bitcoin? How many of these millionaire has Bitcoin? I bet you anything, most of them don't even know what Bitcoin is, because typically they have other people, to invest their money for them, right? And the people that invest money for them, they only, put into the safest thing, right? Just be safe because, you already made it. All you have to do is just diversify so that you could, at least beat the inflation and you could still have, money for your next heir or whatever. But again, so it's a function of time and how many people will accumulate more. So yeah, I mean, with MicroStrategy, already have 500,000 coin already. That supply is taken away. So if this millionaire, each of them won 1 Bitcoin, they will never have it. Let that sink in, right? This is the value proposition for Bitcoin. Now, remember Larry Fink, right? Larry Fink, which is the BlackRock CEO, okay? Whether you like him or not, this is what he says. I suggest that my client take 1 to 2% of their income to put in to Bitcoin. And he said, if that happens tomorrow, if everybody were to do that tomorrow, Bitcoin would be worth $700,000 tomorrow. Had they do that yet? The price is still at 100,000, right? So the idea is that people hadn't done that yet. Are they gonna stampede more soon? I don't know. They might be quietly doing that right now as we speak. So there's no way of knowing, right? Wrong. They can be, right? But again, ETFs, trading, off exchange, supply. You've heard of Trump, Eric Trump said that the Bitcoin supply from the exchange is depleting. You could see it. Check it for yourself. Don't let me lean you either way. But those things matter. It's only a matter of time when people are realizing, oh shit, Bitcoin is $1 million a share, $1 million a coin. It's a scam, right? Bitcoin is 10 million. It's a scam. Bitcoin is 100 million. It's a scam. People are gonna keep saying it's a scam until it's not. Oh my goodness! Again, when people, people will come to that information when they need to, and by that time, like I said, I hope people realize what GameStop is, what Bitcoin is, and how important it is for Ryan Cohen to buy Bitcoin and add more if he can, right? As much as he can. Yes, stay diversified in cash if you want to, but at least allocate something. And the fact that we already allocate 10% of our company balance sheet, it's already a plus in my book. He did it, right? So hedge for inflation. Okay. So let's do another math here, because if Bitcoin goes to $700,000 a coin, like Larry Fink says, then Jimmy would have how much? $3.2 billion more. Okay. Now, if he add more, of course, we're gonna have like that amount would be appreciating. What? How many? 7 times, right? So the amount in which we buy that, say 6 times the amount in which we put in. So, man, you guys, like, think about this. Okay, it's okay. Look, buy whatever you want to buy. Okay? Don't worry. It might not happen tomorrow. You might still have time to accumulate GME. It's okay. Yes, If it happens, sorry if you didn't buy it. Sorry you you have not positioning yourself. But as for me, I'm okay. You know, I've been accumulating. I've been, stashing it away. And if I don't add more to my portfolio right now, I'll do fine. Right? I'll do just fine. So that's how much I've been accumulating. Yes, do that damage earlier. Then remove away. Okay, got it. Cool. All right, guys, I will let you go. Seems muted. I don't know. Maybe people are mad at me because I disagree with my rants. It's okay though. Whatever. Like I said, still respect the guy. Still gonna watch the guy. It's okay. No, it's life. It is what it is. I will let you go. I will see you tomorrow. We'll cover some balance sheets if permitted. But yeah, very excited for tomorrow for sure. Okay, dog's going crazy. So I'll let you go. Okay, bye.